the CME Group in beautiful Chicago, Illinois, the rightful home of the 2012 Olympics. I'm Sebastian of OptionPit.com, and this is your Mr. Top Step update. Well, you can't really talk much about today's market without talking about the grains. Corn breaking all-time highs. It's now above $18.15 a bushel, topping near above $18.17 a bushel. Soybean surging prices. Why? Drought is awful. I was just in southern Michigan, northern Indiana, and through Illinois, and crops are half the height they should be and burned. It looks terrible out there, guys. Crop yields are going to stink. Now, how do you play that if you're a futures trader? Well, I think that there's going to be a big push up this week. It was not until today that we saw some real national attention on grain prices. So once we get big national attention on grain prices, you'll see them pop for a couple days, and that's gonna be all the dumb money getting in, and that's when it's gonna be time to maybe dump them. Other ways to play. If you're an equity trader, look at corn, C-O-R-N. It is the ETF of corn. It holds a mix of futures to try and avoid contango backwardation problems. Right now, it's primarily December corn. So it is a really interesting way to play corn. I think bullish option plays make some sense. With vol where it is, put spread, a short put spread could make a ton of sense. Now, look at the S&P 500. Here we are again. We've had 2 days in a row, 25 handle moves, 50 points in about 2 days, and now we finally take a breather and we see the VIX up. Well, why? Well, we've got a big Euro meeting on August 2nd. We also have non-farm payrolls coming up at the end of the week. Either of those could crush this market rally. I think non-farms absolutely could. We've really taken a nice move. Believe it or not, this 3-day rally that we had last week, probably the hardest move we've seen all year. That's right. The hardest move we saw was not a down move, it was an up move. We've been taking the elevator up and the stairs down. So how do you play it? Well, the VIX continues to rally as the market rallies. Vol does. You know, one of the interesting things, just because the VIX is down doesn't mean vol is down. One of the major things you have to understand with VIX. So we now are seeing kind of this breather today where S&P futures are pretty flat. I think this is an excellent opportunity to potentially step in, sell some call spreads. I think that the AUG 14 and a quarter call spread, or the September 1450, 1475, 14 and a quarter, 1450, any of those spreads could make some real sense because I think the pace of the market has to slow down, and I think that there's going to be some major pressure leading into kind of that 1400, 14 quarter level. Finally, Apple, Samsung lawsuit, new products coming out in September, and incredibly cheap option prices. Why? Well, they just oversold them into earnings. Vol has gotten so cheap in that August level, it's starting to threaten 20%. September is around 22%. I think both of those are getting to levels where we could step in and buy some premium here. In fact, one interesting trade might be to buy Apple premium, buy Google premium, and short NDX premium. You could really basically buy the stuff that's too cheap and sell everything else against it. I do think that we're going to have a slow couple of days. I think it's going to be some tough futures trading. One trade we kind of like is that September condor in S&P 500 futures options as a nice way to hedge what could be a slow couple of days with maybe a great trading day on Friday. So, from the floor of the CME Group, I'm Sebastian of OptionPit.com. This is your Mr. Top Step update.